Hey guys, I'm back and here to do another analysis for you while the markets are volatile. And I'm not going to say that I'm going to start with these videos every day again because I feel like I've said that a few times and I haven't really stuck to my promise. So I apologize for that, but I've got a lot of things on my plate between updating the people constantly in my Telegram group and answering a lot of questions in there, and my photo booth business and trading stocks on my own and managing my own portfolio and updating and managing multiple Instagram accounts and my website and my course and the YouTube. And now I'm trying to do TikTok a little bit, and it's like so many things on my plate and so many things I want to do, and there's only so much that a person can do. It's a lot. It's a lot to focus on. It's a lot to do. I have big ambitions, but there's only so much time and so much energy that I have. And I just want to say this on a side note is that I've been doing stocks for around 7 years now. And while it's paid off in one way, there's other ways where it's taken away from and hurt me and actually taken away from me in the sense of causing me a lot of stress and anxiety over the years. And it's just, there's been so many times where I've had positions in stocks or I was worried about missing out on something that I wasn't engaged with people or in the moment or just enjoying my life and my experiences because my mind was on the charts, it was on the stocks, it was on the news, it was on money. And the reason I'm telling you this is so you guys don't do the same. Money's not everything, and it's a lot, and we all want to make money, and I encourage you to do different things and try different ventures to make money and not just put it all into stocks. It's good to diversify, not just in your stock portfolio, but it's good to diversify in terms of your incomes. But I encourage you to focus on enjoying your life, because I could look at the past 5 years and say I've made some good money and be happy about that, but I could also look back at the last 5 years and say I haven't enjoyed my life enough. I haven't spent enough time with people. I didn't travel enough. I didn't exercise enough. And I didn't have enough experiences. So I'm ready to do that now. I went to Vancouver just over a week ago. I had a great time. Met some people from my Instagram accounts. And they were very accommodating and made me have a great time. And I went to a party and a rave and stuff like that. It was great. And I want to do more of that. And I want to do more traveling. I want to travel around the world. And, I don't think I could day trade forever, and that's part of why I got into educating people and in Instagram and is because I need to talk with people. I need to meet people. Being alone in front of your computer trading is not a great game, and I've done that for a long time. I really secluded myself because I'm a little bit of an introvert. So now I'm getting out there more. I'm meeting people. Would love to meet you guys. I want to travel a bit more, and invite me out. Let me know. I'm not good with making plans and stuff like that. I've tried to set up group meetups and whatnot before, but I haven't really done good at planning that. So you guys ask me out, I'm willing to hang out if you're in the GTA, and if you're not in the GTA, let me know where you are, and perhaps I'll travel there and would love to meet some people around the world soon. So this is my year where I got to enjoy life a little bit, all while helping you guys. I still want to do my best to provide you guys with a lot of information because I've gotten so much love over the year and people have been so appreciative of me. And I really appreciate that. It makes me feel really good and it gives me some purpose in my life. So I hope to continue that, and I hope to continue to make everybody happy. And I'm going to end that there. Sorry for talking so much in such a long intro. I just think it's really important for you guys to hear some of this stuff from a guy who's been doing this for a while. Don't get too caught up in it because it could make you crazy. All right, so let's take a look at the chart. We're going to take a look at the NASDAQ 100 futures over here. And the last time I made a video, I said the bulls were buying all these dips. And that was a trend until it wasn't the trend, where we had a little bit of a double top right here. We broke the high slightly, no follow through on the NASDAQ 100. Let's check on the QQQ. QQQ, I think it was right around a double top right there. And that was the first sign of where we had a little bit of a double top. You had that reversal candlestick up here, indecision candlestick up here. And then you broke the low of this day over here, and you had that higher low pattern starting. broke that low, closed below the 4-period moving average, the red line, and that's when this downtrend really started to build steam. And now you had this little bit of a double top, and you have your high, low, lower high, lower low, lower high, lower low, and the NASDAQ is on a downtrend right now. It's on a daily downtrend. Bulls are really trying to hold this support area over here, and it broke it on the QQQ, but on the NASDAQ, it's holding around that area. So I guess it went a little lower in the futures that night, and it's holding that area as a support still. And this goes back. You can draw a line of support, and there is a lot of support around this area. And you can see the bulls are really trying to defend it today because, look, you just kept having this bounce off this area. You had a little falling wedge, broke bullish, came back, tested it again, held, and bulls are really trying to hold this area as a support. There's a little bit of an inverse head and shoulders over there. Are we going to get follow through from the bulls? That's the question. If we go by my 4-day period moving average, the red line strategy, we will get more of a follow through on the green push tomorrow if we go by my red line strategy. If we go by my bias, I do see more downside coming, and I think even if we do rebound in the short term, I think it could be a good opportunity to short the bounces, as I do believe we could head lower on the market as we still are on a downtrend. What the bulls need to do to change the trend is they need a nice rebound, pull back, hold this low as a support, or hold whatever low they set as a support, and then move back up to higher highs. And that's what the bulls need for a reversal. We are at a critical support area. If you look over here, we're at that middle weekly Bollinger Band. And if we go back all the way to the coronavirus crash down here, since that initial bounce, the QQQ and the NASDAQ has been holding that middle Bollinger Band ever since the coronavirus crash almost 2 years ago now. So we are at a critical support area. The bulls are definitely going to try and defend this area more. Now, if we start trading below these bands, that would be a bad sign, but we are holding the bands thus far. And you can see what happens when you start trading into those lower bands. Big sell-off over here, traded into those lower bands, big sell-off over there. But you can see for the most part, QQQ tends to stay in the upper bands and is in an uptrend. It's when it starts going in those lower bands where you might want to be a little bit more concerned in the weekly. But the market was due for consolidation. It got quite a bit overbought on the weekly. And I talked about this on my Instagram. And if you're following me on Instagram, you would have seen. And I gave out multiple warnings. And I showed this rising wedge type of formation on the Dow Jones. I think I mentioned a little bit of a double top as well. There's a little bit of double top in the Dow Jones. A little rising wedge right there as well. But that was really the red flag. Once it started breaking this support line that I was drawing over there, it was really the red flag for me. And I started making bearish calls in regards to that. When you look on the monthly time frame, it does look like a rising wedge, kind of, on the monthly. So is this the big guys distributing positions, getting ready for a bigger drop? That's the question over here. Are we going to see a bigger drop in the market? I personally think we will. I think we will. And the reason I think we will is because, one, nice daily downtrend. Two, market got way overextended and way overbought on every time frame. Three, you had that big volume spike here, that breakaway type of gap, filled that gap, but came back down, broke this low on high volume as well. And that's why we're probably getting a little bit of rebound now. But the key is that it broke this low. And that was a high volume low, and it broke that low. And it's holding that 50 period moving average, the 50-day moving average, as a resistance area as well. It's riding below that red line. I think we could go as low as the 200-day moving average on the QQQ in the coming weeks. For this week, I think it might see as low as 346, 347 or so, around that 150-day moving average, if we do get follow through to the downside. But right now, bulls are green in the futures. Again, my bias leans bearish right now. And the reason I would stay bearish is normally I would think maybe we might get a little bit more of a bounce over here. This is a big support area. Got those volume spikes at the lows. And we got a little bit of a fake up below this support over here. the reason I do think we'll see more follow through is because, one, this looks a bit like Head and Shoulders up here, and it came back and it retested the bottom shoulder area, and it rejected that as a resistance, and I see that as a bad sign. Two is because it got significantly overbought on every time frame, the monthly, the weekly, the daily, and everything. Three is that we finally have a catalyst, and the catalyst is that the government came out and said, hey, we're going to raise rates. We're raising rates 6 to 7 times by the end of 2023, and that was earlier than expected. And they also plan to start raising them earlier, as early as 2022, which isn't long from now. We're almost into 2022, and they're saying they might start raising rates soon, and they're tapering as well. They're pulling back and trying to cut down on the quantitative easing. So that's definitely, quantitative easing and low interest rates is definitely one of the biggest things that's propped up this market so high. So if the government is tapering and stopping the quantitative easing and interest rates are going up, like they have been recently, okay, we had this little breakout recently, that's definitely going to put some pressure on the market. Now, it depends how high they go is going to influence how low the NASDAQ goes, I think. And you see, rising interest rates actually have a little bit of a positive impact on the banks. The banks have been going up on this. But the rates can't go too high either. If they go too high, it could be bad for the banks because it could cause defaults. But there's probably that sweet spot. But rising rates definitely bad for growth stocks. And if you take a look around, the growth stocks got hit the worst today and recently. So we have significant overbought conditions, or we had significant overbought conditions. We have a daily downtrend. We have multiple breakaway gaps to the downside, it looks like. We're trading below the 50-day moving average, and it's acting as a resistance area. We're trading in the lower Bollinger Bands on the daily time frame. We're testing that weekly middle Bollinger Band on the weekly time frame. Dow Jones has a nice big rising wedge type of formation on the monthly and the weekly chart that's been forming for like 6 months. So, I think it could be a big move because it's been like 6 months. I remember Kramer, somebody told me this actually, that Kramer said it takes 6 months for the big guys to sell. 1, 2, 3, 4, 5, 6. And they would do it slowly. It would make sense to avoid any panic, and they can do it slowly and build up short positions, stuff like that. That's a little bit of conspiracy theory. So don't take my word from it. I'm not saying the market's going to crash, but I did make that video, I don't know, a couple months ago, how to know when the market's going to crash or not. And I analyzed the 2008. And, I said, we're starting to get a lot of those signs. And the market, I think, could be due for a little bit more pullback, but we shall see. Maybe not. But I'm leaning to a little bit more downside, and I think any green could be a good opportunity to add to a short position or to take a short position. It's not financial advice. That's my thought. I guess we'll see in the coming days where we head over here. But like I said, I think the rising rates is the biggest concern. And to compile with that, there is other things that are adding tension, such as the government debt ceiling and the fact that the U.S. might default on its debts, among other things as well. So lots going on. We have some catalysts, some negative catalysts that definitely could affect the market. But then again, at the same time, QQQ, you still look back, and it has had these dips many times before, only to come back up. And maybe that's what might happen again. I mean, it's pretty evident over the last 10 years or so. But bull markets do have an ending. We don't know when it is for sure, but bull markets always do have an ending. And whenever we do hit a real bear market, I wouldn't be surprised that it's at least a year-long bear market whenever it does happen, because this has been a significant bull market for many years. So we shall see how it goes. Who knows for sure? Like I said, I'm leaning to the downside right now, and I called that out on my Instagram. So check out my Instagram. You'll get more information there, a little more updates from me than I post on YouTube. That's at 10 Bagger Stocks on Instagram. And I'm going to leave it at there for today. Thank you guys for watching. Have a great night.